Are you ready to be a tax-free business owner that makes profit and builds wealth? What's up, blue collar business owner? Welcome back to the Blue Collar Prosperity Podcast. I'm your host, Paul Maskill, where we focus on helping guide you to have a prosperous business. Today, we have with us Mark Miller. Mark is a financial powerhouse with nearly 40 years of experience helping business owners, executives, and high net worth individuals legally slash taxes grow wealth and build lasting legacies. He is the co-founder of Hilton Tax and Wealth Advisors with Bradley J. Hilton, the grandson of legendary hotelier Conrad Hilton. He's the best-selling author of Hilton Wealth, How to Invest Like American Dynasty, revealing the exact wealth-building strategies used by the Hilton family and Fortune 500 firms. Featured in the New York Times, Kiplinger's, Fox News, Mark is here to show you how to think, invest, and build wealth like an American dynasty. So that is Mark Miller. Welcome, Mark. Thank you so much for coming on the show. What's going on today?
Just having a great time, and thanks for having me on, Paul.
Yeah, I am looking forward to this conversation. My background's in finance, and then I got into the blue collar world. So this is kind of a combination of my two favorite things. So that's what we're gonna jump into today. Before we do and give our listeners all sorts of strategies and good nuggets, how did you get to where you are today? How did your journey start to get to where you are today?
Came straight out of college. I worked for that small little company called American Express, and got my feet wet in the financial services industry. Did really, really well there. Was kind of more what we kind of call now, and I do things different now, but it was on the retail side of the business, very enamored with the brokerage business and becoming a broker, stocks and bonds, all of that type of thing. Mutual funds, selling, offering mutual funds. And just over time, I was fortunate to have meet some wealthier people that were more on what we call the institutional or smart money side of the business. And then started to meet more and more people over time. And then also started to get involved with some various trust companies around the country. So which solidified me more in that area. And also specifically a lot of business owners, which is I have a passion for working with business owners. Brad Hilton, who is my partner, has a passion for working with business owners too. Eventually, over the years, met the Hiltons. They are some of the best tax mitigators really in kind of in the world. And I had done a lot of that myself. And we just over time, we just basically developed a partnership. They asked me to be the manager of the Hilton family office. And then Brad and I, and I'm kind of representing this today, our company, Hilton Tax and Wealth Advisors, is a spinoff of the family office to kind of help folks that don't have, 10, 20, 30 million kind of have access and plug into these more advanced wealth building and tax saving strategies.
Amazing. Well, let's dive into it. So you said the Hiltons are one of the best tax mitigators. Obviously, nobody likes to pay taxes. I have plenty of clients who initially tell me, I don't want to make a profit because I don't want to pay taxes. And I don't love that mentality because if we don't make profit, it means we're not making any money. So you're all about the tax-free business owner. How do we keep more? How do we grow more, reinvest that, build wealth? So give our, the listeners just a high level or like some of the things out there that they might not know about. What are some of the strategies that you can legally tell us about being a tax-free business owner?
Sure. Well, I think the first and foremost thing is most business owners know about a business plan, a marketing plan. They may have other set out plans related to their company. And maybe it's not all written, but they sure have it in their head and it's formalized in their head. But practically no business owner has a tax plan. And actually, that is the biggest expense of anyone's life. If you don't have a formalized tax plan in place that has various strategies, and we have various bulwark strategies, we have over 100 different strategies now, and then also a lot of advanced tax mitigation strategies. Some are proprietary to the Hilton financial network that are all legal, moral, ethical. Of course, the Hiltons are always going to do that, and we're always going to be on that side. And they're all proven strategies through the codes, case law, private letter rulings that, are not going to increase your chances of audit, but are going to decrease those chances of audit. So a lot of people hear from their CPA, don't do anything different than the regular stuff you always hear about because you'll get audited, right? That's not true. Again, if you've got documentation, everything's in the codes or in case law, then it is fine to do any strategy, and it doesn't automatically trigger an audit, so to speak, because you're doing something different or because you have an advanced tax plan to mitigate 50% or even, like we talk about in one of my books, to get to a zero tax bracket as soon as possible.
Yeah, it's when you talk about documenting, obviously not even just from a tax standpoint, but how important it is to document in everything we do in business, because it makes our life a lot easier. But I know, especially from a tax standpoint, that if you have documentation, if it's real, then, and you're following the rules, then you're good to go. So how do we start to navigate this? Because like you said, most of us don't even have a tax plan. We have all those other plans you mentioned. And a lot of times our CPAs are like, hey, Mark, it's December 31st. Looks like you're going to have a pretty good year that ends today. The only strategy I have for you is go buy a bunch of vehicles and we'll accelerate the depreciation. And even if you don't need the vehicles, at least it'll lower your tax bill. What do you tell those people?
Well, that's not tax planning. That is putting out money that you're going to spend eventually anyway on equipment. And that all that's doing is just foregoing and deferring the taxes in a sense. So that's really not tax planning. Tax planning is putting a formalized plan together. Let me give you an example of some bulwark strategies. Many people here might have heard of what's called the Augusta Rule, where you're allowed to use your home as a meeting space or conference space up to 14 days a year and take a substantial deduction. There's also fringe benefits that you can give yourself. I won't go to all those details here. We don't have enough time, but there's fringe benefits that people don't take advantage of. There's deep dive deductions that are not just surface strategies or deductions that a normal CPA or you'll find in TurboTax or something. There's deeper dive deductions. So let's think of it this way. The tax code is well over 100,000 pages. Do you think there's just information in there on a mortgage interest deduction and taking charitable deductions? There's a lot more in there, but let me preface this all by saying that most CPAs, and you can read about this in my book, The Tax-Free Business Owner, most CPAs simply just record your taxes. They're what we call historians. If you're used to doing this, your CPA says, give me all your books, everything from what happened in the previous year. And then we'll get to work on all doing your taxes, what they call compliance work. The reason they call it compliance work is they have to comply with IRS deadlines. It's that simple. And that is getting your tax returns done. That is just a given. Most CPAs, even good CPAs and smart CPAs, that's all they're doing. They're just putting your information in an advanced version. By the way, Intuit makes software for CPAs that is an advanced version of TurboTax, and it's got just like practice management things attached to it, like CRMs and things like that. So you can keep track as a CPA of your 300 clients that you have to be able to get their tax returns done. So most CPAs are fine with that 1950s, 60s model because they can make $500,000, $600,000 a year profit just by doing that. So they don't want to veer into other territory. And that's why you'll see, and most people probably are used to hearing from their CPA if they've seen something online or something like that. They'll go to their CPA and say, what about this, this, and this? And what do they hear? No, I don't think I would do that because that could trigger an audit. Immediately they go, oh, okay, thank you very much. I won't do that. Okay. Well, that's a lot of CPAs MO because that's outside the scope. They don't want to go do that. First of all, take on the work for it, but also take on any possible liability if they don't do it right or something along those lines. So that's 95% of the CPAs out there. So a proactive tax planning CPA is in the year that you're experiencing your revenue and your income are installing these different strategies to actually decrease your tax burden substantially. You can't do that after the fact. You got to do that. Like for 2025, right now, we've got a few months left to do. We're in tax planning season right now with our clients. We're in back-to-back appointments, going through quarterlies with all our clients and installing and making sure all of their plans are 100% in place so they can save as much as they possibly can save in 2025. January 1st, 2026 hits, you can't do anything in 2025 anymore.
Yeah, I mean, that's perfect timing for this episode as well, because I know, it's almost October when this is coming out. And a lot of people probably haven't talked to their CPA since they did their taxes in April, or they just finished their extensions, but they actually haven't done any tax strategy for this year. And like you said, we got to get it done before the calendar hits 2026. So one of the things you kind of alluded to is obviously the more taxes we can save, it allows us to build more wealth with that additional cash that we now have available. Most of our listeners, we've had this conversation several times with other guests, most of our listeners, a significant, if not almost all of their wealth building strategy is the value of their business.
Mhm.
How do we start to get out of that mode of, yes, we have a valuable business, but now we have this excess income, possibly excess tax savings to start to really build a legacy and build wealth?
Yeah.
What are some things our listeners can do to start kind of transitioning that mindset from business owner to actually let's build a legacy, let's build generational wealth and really take it to the next level?
That is a great question. One of the things I would say is that it's okay, and as business, I've always at any given time had several businesses and things going and all that. And it's okay that some maybe larger portions of our wealth are in our businesses because they can generate a lot of cash flow. And then if we can layer on top of that, tens of thousands, if not hundreds of thousands of dollars back in taxes, then you're absolutely right. We can take that money and we can repurpose it and start developing a strong portfolio outside of the business. And you should do that. Our strategy, and when you look at the wealthiest of the wealthiest, first of all, our real goal is it's great to say we love tax mitigation. Okay. It's phenomenal. Our clients love it, but more we love wealth creation because that's what, that tax mitigation can help. And that's how the wealthiest of the wealthy really get a lot wealthier is by saving massively on their taxes. Because if you can save 20 or 30% on your taxes, that's just like making 20 or 30% on your money. That's a great return on an annual basis. So then we want to repurpose those assets into, and the wealthy will put it into one of the things that the wealthy do that retail investors, we call it the smart money. What the smart money does is first of all focuses on safety and security and then focuses on returns. On the retail side, it's just the opposite. How do we know that? Like if you look at mutual funds, which I used to be a big fan of, not so much a fan of now, but I used to be a big fan of. Sold a lot of them, worked with a lot of different companies back in the day on the retail side. So mutual funds sell their mutual funds primarily by showing the 1, 3, 5, 10-year performance figures, okay, which is return-based, 100%. Whereas a smart money investor will say, hey, what is the risk associated with whatever that investment is? And then I just expect to, especially the kind of sandbox that they're playing in and that we're playing in, I expect automatically the returns are going to be there. So you'll see, and by the way, you'll even see this in Warren Buffett's portfolio. Everybody hears about all his equities and Berkshire Hathaway and all of that. Well, a good giant chunk of his portfolio is very, very safe and secure. And most wealthy people, that's why you'll never see most wealthy people fall off the Forbes 100 list or anything like that, because they're not taking massive gambles and taking 80% of their money and putting in some business opportunity or some new business they're doing and have the possibility to lose it all. Maybe 50, 60% of their money is very safe, very secure, making them, 5, 6, maybe 7% per year in the sandbox they play in. And then they can take the other portions and take a little bit more risk with that to get even higher rates of return. So your question is very good about it is super important and is massively important that you also invest outside of your business because it's about diversifying. If something happens to your business massively, you could lose everything overnight. So you should at least take some portion, whether that's the taxes you save, whether that's just cash flow you have, take some portion of that. Nothing the matter with, not a giant fan of 401ks because we usually have better options for those. But even if you have a 401k, excuse me, well, that could be a good option, at least to start investing and get money diversified outside of your business.
Yeah, it's a super interesting conversation to, I think a lot of our listeners too, from the sense of pre-COVID, a lot of times in the trades, we just thought, well, we're just going to run this until we can't run it anymore, and then we're going to close up shop. Now we see private equity coming in and seeing the value in the trades. They're COVID resistant, they're essential
Yes.
business. There's less and less people doing it, and the demand is still there. So now I think a lot of our listeners have an opportunity to actually build significant wealth that 20 years ago probably nobody thought was possible.
Yeah.
Really good insight into that. So now I want to kind of get into actually the name of, how this whole thing started with the Hilton, all their secrets, how they build wealth. I'm sure our listeners are just as intrigued and interested. What are some of the things that they've done historically to create that dynasty that you talk about? Obviously, like you said, they've got some proprietary stuff. They've got thousands and thousands of things they do. But like, what are some of the things that most people probably don't know that the Hiltons have done historically?
Well, most people know the Hiltons from Hilton Hotels. The Hilton family, and as the manager of the Hilton family office, they've been divested from the hotels since, the mid 2000s. Okay. So it's been quite a while. Blackstone bought them a number of years ago, not BlackRock, but Blackstone. But there are still plenty of family members that have their hands in some hospitality things, but most of what they've done is a lot of real estate, a lot of private equity investments. The Hiltons are, and especially Brad, is pretty risk averse. So generally, even if we go into a private equity offering, there's some backstop there. It's not like, hey, let's just go into a naked offering. Hey, I think this has really got a great opportunity. Here's $3 or $4 million, and we sure hope this goes. It's usually like, here's $3 or $4 million. What do you have backing up at this in assets if something goes wrong? If you had to fire sale, can we get our money back? Okay. Which is a little unusual because a lot of times, and when Brad and I first started going to a lot of conferences several years ago, talking to people and saying, here's what we're trying to do. We're bringing these advanced concepts a little more down, more to Main Street, the average investor. And we would go to these private equity firms and we would pitch them and we would say, well, we want protection for our investors and or for our funders, our clients. And they would just look at us with this blank stare. Well, why would we do that when people will just give us, money with no strings attached? And the strange thing about it, in the last several years, and I'm not saying this because of the impetus of us out there. There are some other people in our network, I think, that have gotten out there and got the word out more. It is odd how many companies, at first we were like kind of, had to twist arms. Now it's companies are coming to us and they're saying, hey, we understand what your model is. We get this and it makes common sense. Can we have access to your capital or to your clients? Okay. And when you think about it, that does make common sense. But it's been more of a retail concept, really, even on the institutional side, a little bit to where, hey, we're going to put all the onus and all the risk on the investor, and the company takes no risk. And honestly, in the private equity space, a lot of companies are realizing we should have some skin in the game too, and everybody wins. So if we're really that confident in what we can do, then and we want $10 million or $20 million, then we should have then we should basically be able to provide that and push that out there that will back that up, or we'll be able to back a portion of it up or something along those lines. So anyway, I think it's really important for people to understand that the Hilton model is really safety first. And then we actually have, when we work with clients, it's called the True Wealth portfolios, where we have a really well-designed, well-allocated model. We use kind of a bucket system. We put money here in this bucket, this bucket, this bucket. They all have different risk and return profiles, and design balanced portfolios. But the first and foremost area is the two first buckets that are really focused a lot on safety and security. So if something goes wrong in the more at-risk buckets, then we don't lose our whole portfolio, or we don't have to start over from scratch.
Love it. That's super great advice for anybody out there. So as we begin to wrap this up, Mark, we've talked about a lot of different things. We want our listeners to take immediate action, so that way when they stop listening to this, they can actually go do something to move their journey a little bit more closer to where they want to be with their goals and wealth and prosperity and all that. So give our listeners just one thing that you would recommend they do within the next 24 hours to move a little bit more forward.
Well, again, I would maybe get online and read some articles about risk reward, which, by the way, most people believe automatically, and we've been sold that on the retail side, that it all is about risk. If you're going to take more risk, you're going to have more reward, and vice versa. Well, on the institutional side, it doesn't always work that way. And that's important to understand. The other thing I would say is, if they are interested and would like to learn more about some of these kind of smart money concepts, they can go to our website, which is hiltonwealth.com. That's hiltonwealth.com. And at that website, you can read all about our company, what we do, but you can also order a couple complimentary books. We talked a lot about the Tax-Free Business Owner today, which is a book that Brad and I wrote several years ago. Our newest book is called Hilton Wealth, How to Invest Like an American Dynasty. And either one of those books you can order. We'll send them to you complimentary. You can start learning more about how the smart money does things.
Awesome. Go there, guys. Check it out, hiltonwealth.com. Mark Miller, thanks again for coming on the show, sharing your journey, wisdom, and advice for all our blue-collar business owners out there as we continue our journey to prosperity. Really appreciate you coming on the show today, Mark.
Well, thank you, Paul. Appreciate it.